Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 1st of September, and the markets closed here today with a gain in this week. So we're starting out the new month on a positive note for the most part, except for bonds and Bitcoin. We'll talk about both of those, but the S&P is just 1.8% off its high here for the year. So things are looking up again after a quick turnaround. As you know, we didn't want to buy the dip. We didn't want to buy the market when it was below that orange declining 5-day moving average. Last week we saw the buyers, tentatively taking control there, and then this week really they took control as it broke above this high right here and made that higher high above the rising 5-day moving average. That's where it was convincing the buyers had regained control. And to my surprise, there was no pause right here at the anchored VWAP from the high of this year. I look at those as a level of interest where there's the potential for supply, but I certainly don't sell my stocks and I don't sell short there. It's just a level where we look to say, is this market going to slow down in there? It's a level of interest. Raise your stops, etc. It wasn't until basically today we saw a break of the pattern of these higher lows. So perhaps we start in next week with a little bit more of a consolidation. That would really be the ideal scenario. Maybe we pull back, kind of something like this on the daily chart. That would bring us down, maybe below that 5-day moving average a little bit. But still, if we were to pull back even into this area where we now see that 50-day moving average and the anchored VWAP from the high, where those come together, that would really be a great place to set a launching pad for this market to move to new highs for the year. For the NASDAQ, we were, again, positive here. I was looking for the potential of a pullback. We never got it. So, I don't sell short when there's a rising 5-day moving average, just as I'm not a buyer with a declining 5-day moving average. It's not until over here where the buyers definitively took control. And from there, I've been giving the benefit of the doubt to the buyers. We had the same thing happen here in that we had a short-term lower low, breaking this little pattern of these higher lows. I don't view it as a reversal signal or a reason to sell short, not with a rising 5-day moving average, but it sure would be nice to see the same type of scenario in here. Maybe, a day or two of consolidation, pull back a little bit, test that anchored VWAP from the high, test that rising 50-day moving average, have the 20-day moving average come up through it as well, because the 20-day moving average will be rising next week as we get rid of this data. So, things are looking good again. We'd like to see that pullback to reset and give us a better entry, lower risk entry for a lot of newer positions. But this week was a great week for trades. I had put on Twitter ATI right here, right as it was breaking higher. And for Alpha Trend subscribers, we got involved in FLIR right over here. We got involved in RPD right at this point, 48 and change. 48.45. We got involved in Uber. So just a bunch of nice trades out there. Uber was a purchase at 45.60. We also got back involved in ACMR. We had taken the trade from here up into this area, got back involved here, and still have a third of that position left. So there's a lot of opportunities setting up with strong stocks in the market overall. The Russell 2000 has gone beyond the anchored VWAP from that recent high. We still have a declining 20-day moving average. The 50-day moving average is starting to flatten out and turn higher. This market, got a little bit more of a bounce than I thought it would, but it's good to see that it bounced in a logical place. That is the year-to-date anchored volume weighted average price is that thick blue line, and the conjunction of that thin black line, which is the 200-day moving average. And basically that's been, the midpoint of this range overall. So if we look at that on the weekly time frame, here we can see, this is the bigger range that we've been in for over a year, really. And now, we're, again, just bouncing from basically the midpoint of that range. We got cautious up here, and I'm still not bullish, but this is, potentially a higher low that maybe, the Russell 2000 can start to heal a little bit and build the energy for a breakout. That is, the last 3 times it got up to this range, it was extended when it got there. Now, if we get up there, and let's say it takes another week or two, that would be great, because then we would have a higher low in this area, and that would be the place that we could set our stop under for the potential that this Russell 2000 could maybe, jump up to the next level of potential supply, and that, of course, would be this prior band of support, which had then become resistance as well. So this is 2021 support and then resistance in 2022. That would bring us up to about 210, which is 10% higher from here. So Russell 2000, it's not quite ready to buy. In fact, it's too late to buy right here because we've just run from 182 to 192. So it needs to settle down. I'll be paying a lot more attention to this Russell 2000 and hopefully be able to take it seriously as a market for the first time since early this year, when we saw that it was the leader back in the first few months of the year. If you recall, that was really where the strength was and what a lot of people thought was going to turn this market around. But instead, it was really the NASDAQ that has led the way as this market broke to a stage 2 uptrend right over in here. And we've been in that uptrend since. So back to the other markets, such as the semiconductors. We're back up against this level and where we had seen a spike higher last week, and we're finding a little bit of supply in here. And these are the higher lows that I was pointing out for Alpha Trend subscribers. I do these videos every single day for subscribers, and that's where those ideas come from, like the ATI, ACMR, etc. But the semiconductors are, still looking like the strongest group. They're only a couple percentage points off of their all-time high, because this was the all-time high here a couple weeks ago. You've got to be impressed with their leadership and the ability for NVIDIA to turn right back around after that, was looking like potential for a disaster off of earnings. The earnings were reported on this day. It got trapped under that anchored VWAP from the event, and then right here, that's where the buyers took control at about 472, and then it ran right back up to the 500 level. So, certainly if you're trading semiconductors, you've got to be watching that. Biotechs did make it past this little band of resistance. I told subscribers that, I thought it was possible it would do that, but not a trade I'm interested in taking, not with a declining 50-day moving average, declining 20-day moving average, declining 200-day moving average, declining year-to-date anchored volume-weighted average price. It's good to see that it's beginning to heal a little bit, but I certainly don't call this bullish. What we would need to see, I'd like to see it really, for this to maybe start to begin to turn around, run up into here, spend a couple of days, weeks, in that area, and then perhaps we can start to take the biotechs more seriously, because otherwise they made it down to the bottom end of the recent range, and maybe they're going to head back up to the midpoint of that range and just fizzle out. I think you're just better off with stocks that are trending, and these stocks, based on the index at least, are not trending. Of course, there's always going to be an individual stock or two that bucks the overall trend. The financial stocks made it right up to the anchored VWAP from the high, and they're getting a little bit stretched in here. This is also that prior band of support in here, so let's put that anchored VWAP off of that peak there, and you can see how they kind of come together in this area. It's had a nice little run, so I think for this market, maybe a pullback, a pause that refreshes, builds a higher low in here, gets that 20-day moving average higher again, because we've got to get rid of this information next week for the 20-day moving average. So I'd like to see that pull back, make a higher low near about 34.20 or so, and then perhaps if you're bullish to the financials, then you want to be a buyer here. You don't want to buy the pullback, and you don't want to buy the breakout past this level. Instead, you want to buy as the momentum renews on the way back up, so something like that, and then of course set your stops somewhere underneath that most recent irrelevant higher low, which hopefully would be at about that 34.20-ish level that I just mentioned. Energy names have broken out, and that's, you got to look at oil. Sometimes I like to look at these point and figure charts because they really simplify the look of a stock or a commodity. And let's just frame that a little bit better. But you can see here that, we're clearly bullish in energy, in crude oil, and it had a big week. It had a big day today. It was up a couple points. Looking at the candlestick chart, also you can see we're breaking that resistance. So if we put a volume weighted average price off of these peaks, so for instance right here, we've cleared that one, and now the anchored VWAP from this high is right where we are. So maybe oil settles down a little bit, the commodity itself. It doesn't have to. This is a level of interest, just like we saw in the S&P 500 and these other markets, that the anchored volume weighted average price from the peak was a level of interest on the 30-minute time frame. Now we're seeing that on the daily time frame for oil. So it's something to be aware of where the market may slow down a little bit. The other thing that happened this week that I think was significant for a couple of reasons. One, because the equities held up better when there was so-called good news for Bitcoin with the GBTC, Grayscale Bitcoin Trust is maybe going to be able to convert to an ETF instead of a trust. So Bitcoin ran from 26 up to 28 real quickly, and then it failed, and it's failed miserably, and it's continuing to fail. And this was that initial move up. Now we can see we've given it all back plus some. So what I had mentioned was, we're still below a declining 50-day moving average. This is the year-to-date anchored volume-weighted average price. We're below that. It looks to me like at a minimum, we're going to test the anchored volume-weighted average price from last year's low. That would bring us down just under 25,000, maybe about 24,700 or so. If you liked the video, give it a like, give it a comment, share it with your friends. Enjoy your long weekend, and thanks for tuning in.